Good day, fellow investors. The best buy you can make for Black Friday, where people will spend a record of $902 per person on gifts, foods, decorations, whatever, and that money will likely be spent and never seen again. I think the best investment you can make for your financial improvement, for your quality of life, is to put that money into investment and compounding. Let me just show you how that works. Let's start with zero. Let's commit to putting $500 per month for, 20 years. If we reach a normal investing rate of 12%, maybe a little bit more like 15, maybe a little bit less. If we compound annually, we get to $300,000 to $600,000 of invested money over time. So instead of spending, think of investing. You can put it into stocks that have historically returned over 10%. However, at this moment in time, even Goldman Sachs, that predicts stocks going up 10% next year, they say over the next decade, because of the great returns over the last decade, the returns will likely be lower than expected in the next 10 years because now, if you look at the stock market and the current earnings yield of the market, it is among the lowest yields in history and half of the average earnings yield. Thus, yes, the returns will likely be over 3%. Also, when you look at the stock chart, this is already made the 10x. So buying now, you are buying a very expensive market. Then you can also think about bonds, because Warren Buffett says the market is too expensive and he is making $1.3 billion per month on treasuries on his cash, and we will discuss that soon into a bond video. However, we have also discussed how bondholders can be screwed by inflation over time, and Warren Buffett has short-term bonds. But the key with inflation and long-term bonds that is in pension funds, it is essential to build one's own pension fund. And that's why I think the best investment you can make, spending money, is to first build your long-term wealth and then spend on other things. And if stocks are expensive, if bonds are risky, value investing is the answer. We have here our value investing quadrant, and there are already some cheaper things than the market. We have put here Berkshire as a very low risk investment that will likely give 6% going forward at a lower risk, and that is because Berkshire is now a hedge. But again, that hedge is also priced in, thus also expensive at a 1 trillion market capitalization. Other cheap pockets are food stocks, retail stocks, some emerging markets. And then when you build a portfolio, you can decide, okay, I'm going to buy the cheaper side of things now, and then build a portfolio over decades. Let me show you what I do. So this is my research platform. Everything is here on the top thread, and here you have my covered stocks. There is a little bit more than 20, and these are some very interesting value investments that you can buy. Now, you can research them and follow them yourself, or you can have me do that for a small fee on the research platform. But I watch businesses, I watch also many sectors and things like that, and then when something is cheap, I add it to the portfolio that allows for long-term compounding. For example, one of the top positions in the last year, 2024, was Liberty Global. And it was cheap. The cash flow yield was around 15%. They said there was a catalyst ahead, and we have all made a good return on that as they spun off Sunrise. And that's exactly what I did. If you look at the buys, June, May, April, March, so exactly when Liberty was cheap, I was buying that very cheap value investment that nobody liked. And that's how we do well on value investing. Now, my current position, it has a P ratio, forward P ratio of 8-9. It grows at 10% per year. If you have questions, send me an email. That's what I do. As I said, you can research it yourself here, or you can just read everything on the platform, which is again a best investment out there. And the key difference is you can invest in stocks always go up at a historically high price to earnings ratio, or you can decide what are the driver of investment returns. With stocks always go up for some reason. That works until it doesn't. With value investing, the drivers of investment returns are business earnings. And you have to find those business earnings year by year, reinvest, growth, dividends, buybacks, value creation, and that's how you build a portfolio that's safe and sound no matter the future environment, and that's what allows for compounding. And that's something that I always think is the best way to invest over time, because whatever happens, you are okay. That's exactly what I do on my research platform. Every month I buy something. Instead of spending money in this Christmas season on stupid things, you might want to start a long-term investment compounding portfolio, and over a decade or two you'll be very happy about it. Check it out in the link in the description below. Thanks for watching. Compound, invest, and I'll see you in the next video.